Hey, what's up? Good morning, everyone. Happy Wednesday. It is Fed Day. It is Fed Day. A very, very huge event that we've got going on, specifically in the current market conditions based on what we've seen. Most recent downside, we know that the goal here is to get lower rates faster. And is this going to be the condition that budges Jerome Powell? But first, I do have some news out of Google as well as NVDA. Some of the big names, Google took a tumble actually, or Alphabet, right? Took a tumble yesterday, a decent little drop, undercutting the most recent lows that we've had in the market by absorbing a cybersecurity startup called Wiz for $32 billion in an all-cash deal intended to boost Google's lagging cloud business that the tech giant did confirm yesterday. So this is its largest acquisition yet. It's 2 times larger than when it purchased Motorola. And it's also the year's biggest deal so far. So Wiz is it's a startup, I guess, founded in 2020. It sells security tools that protect information stored in data centers. It works with some of the biggest cloud companies, including Google and its rivals Amazon and Microsoft. Wiz's products will be available to Google competitors, but bring the tech in-house that could help it grow its share of the global cloud market. Google has about 12%, trailing Amazon, which has 21%, and the Amazon Web Services, which commands nearly a third. So naturally, when one company acquires another, you do see a dip, right? That company actually pulls back because it's taking on more risk. It's putting $32 billion of capital at work. But also, right, Wall Street wasn't super happy with the valuation of Wiz. Wiz is aiming to double its revenue to $1 billion this year, which means that Alphabet is set to pay 30 times annual revenue for the startup, which is much higher than the expected kind of software ratio, which is 10x. So 30x versus 10x, that's a big deal. And it seems that Google is also paying 40% more than it initially offered Wiz last year, which the startup initially turned down. And Alphabet ended the fiscal year with $96 billion on hand. So acquiring Wiz in cash would consume about a third of its balance sheet. So that's why it took a decent little tumble yesterday. It kind of pulled up into the end of the day, but still not super happy with that. NVIDIA also set to announce new chip partnership with GM on self-driving cars in a keynote address on NVIDIA's annual GPU technology conference hailed by the New York Times as the Super Bowl of AI. CEO Jensen Huang unveiled a new, faster family of chips and a deal with General Motors to make autonomous vehicles, declaring that the era of physical AI is here. Huang also in his signature black leather jacket, said that NVIDIA will build custom AI systems for GM's next generation of vehicles. And the announcements come at a crucial time as NVIDIA investors start to begin questioning the mediocre rise and its sustainability. So we've seen that NVIDIA, even though last week, right, markets were down, it was trying to catch a bit of a bid, but I guess the speed and the use is starting to become a huge question for NVIDIA. So we also had Putin yesterday agreed to limit attacks on Ukrainian energy infrastructure after a 90-minute phone call between President Trump and Vladimir Putin. Yesterday, the Russian leader said that the country would temporarily halt attacks on Ukraine and Ukrainian energy assets, but stopped short of signing on to the the broader U.S.-backed ceasefire that Ukraine agreed to. According to the Kremlin's readout of the call, Putin told Trump that a lasting ceasefire will require the U.S. to suspend supplying Ukraine with weapons and intelligence. So we'll see how that kind of holds out. That news didn't really spark too much of a bid in these markets yesterday after it came out, but we'll see. Progress is being made. The main point of interest in terms of news that's expected today comes out of Jay Powell himself. So Jerome Powell, headline figure on the day, the Fed. The markets, their fingers crossed that a Powell put comes into play realistically. But the bulk of the earnings season is technically behind us, right? Geopolitical headlines are still active but quieting down. We have to turn our heads to the Fed and the Fed policy. So Fed Watch futures, they indicate 100% chance that Fed Chair Jerome Powell keeps rates unchanged, and well, it's not only his decision, but that he keeps rates unchanged today and is pricing in a 76% chance of a 25 basis point cut during its June meeting. The adjustment came after inflation readings backed off and the economy showed additional signs of slowing in response to tariffs and other news. So realistically, the Fed may not be in a rush to tinker with the monetary policy as things stand. You probably shouldn't be in a rush to tinker too much with your assets until the Fed kind of makes a different push. Because right now, the way that I see things is that markets are reacting adversely to a lot of geopolitical tensions. There's been a lot of panic in recent weeks due to the correction on Wall Street, right? Markets are down 10% from their all-time highs. But it's important to stay rooted in what the numbers say for themselves as opposed to what the latest fear and worrisome projections kind of display on the public. There's no better way to see what that would mean to Jerome Powell after the Fed blackout period. He's going to reiterate these messages and talk about the monetary policy today at 2:30 p.m. Eastern. The rate decision itself is going to be at 2 p.m. Eastern. Despite elevated levels of uncertainty, the U.S. economy continues to be in a good place. The labor market is solid, and the inflation has moved closer to our 2% longer-run goal. This is what Jerome Powell said in a forum on March 7th, and that is true, right? A lot of that CPI, PPI inflation news, of course, we haven't seen the PCE yet, but the inflation news that came out last week, it seemed like it was stifled by just general geopolitical concerns. The figures were pretty good, right? Markets couldn't really rally, so that was a pretty big point of concern for me. But sentiment readings have not been a good predictor of consumption growth in recent years, and we continue to carefully monitor a variety of indicators of household and business spending. Looking ahead, the new administration is in a process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, as well as regulation. It is the net effect of these policy changes that will matter for the economy and for the path of the monetary policy. While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their likely effects remain high. So as we parse the incoming information, we are focused on separating the signal from the noise as the outlook evolves. So we don't need to be in a hurry, as we are well positioned to wait for greater clarity. This is what he reiterated. It seems like this is the stance that he's taking. Today we're going to see if Jerome Powell takes more of a dovish or a hawkish stance, but markets still reacting a little adversely overall this week. We started Monday off pretty well, and then things kind of crumbled very quickly as yesterday a plethora of sell-side momentum came through realistically. A lot of sell side started off the day yesterday, which opened up the downside that we saw, and we're still not out of the woods, right? Yesterday we had a B-shaped volume profile that creates a nice little balance into the lows with a very long tail. If we can expand above that tail, it should be an easy push to the upside, but realistically, under 5,700 on the S&P 500, I'm not very happy with the bull side, right? I think that the sell side is still prominent from that area. We're building a lot of volume into the current highs of the ETH, which is putting downside pressure in this market currently. And that's the area where they started to sell off yesterday. Massive thousands of lots of sell side pressure on the ES. We were watching it live on stream yesterday, trying to trade on the short side. Thousands of lots came in between 85 and like 95 on the S&P. So that's a massive area where the sell side is expecting to try and hold things out to continue the momentum that was created yesterday. Yesterday they just started right off the open, just hammering the sell. NASDAQ and tech right now is pretty weak too. They got to hold under 760 for that seller. So for me, 5,700 S&P, if they sell from there, right, I'm going to be looking for that continuation lower. If they just burst right through, you know what? I don't mind flipping. But this is, again, I'm going to repeat this again. Every Fed day we talk about this, but Fed days are very, very touchy. They're very volatile. They can have mood swings. There's a very little chance of, taking in the information real time and creating a sound judgment in milliseconds. It's going to be very hard. A lot of traders, big traders, packs, right? Huge persona in the trading world, a great floor trader, now electronic trader. The guy was on the floor. He knows what's going on. Shout out Pax. But every time I remember his quote from Twitter saying that he's never had his biggest winning trading day on a Fed day, but he's had his worst trading day ever on a Fed day, his biggest losing day. So just keep that in mind as you're going into today. Risk is elevated. You want to keep that in mind. I'm probably going to be hands off into the afternoon. It doesn't make any sense. If there's something in the morning, fine, whatever. But the afternoon, I just like I haven't. I've had a few I've traded a few Fed days in the most recent past, and they haven't necessarily been great. So I really want to stay hands off. I'm not like saying this is a massive warning sign, everyone get away from your computers. Just really manage your risk and understand that it's a period of high volatility. I don't know where it's going to go. It could do nothing, right? It's possible, but I don't really want to experience that. So it's a very fluid week of news and movement. It's something that you have to keep in mind that we've had VIX expiration yesterday. We have the Fed today. We have OPEX on Friday, right? Contract changes. It's a lot. So keep that in mind as uncertainty is elevated as we're going through this week. So baby steps. Thank you all for listening. I'll see you guys on the other side. We'll do this again tomorrow. Happy trading day, and let's open up our live stream today. Remember to check out community.tradepro.